Remember back when we were talking about the healthcare system and everyone was crabbing about how terrible the Canadian system was? Well, it's payback time. And now we're going to talk about the mortgage, the residential mortgage market and the banking system. So we're going to talk about how actually pretty good the Canadian system is. They have roughly the same home ownership rate that we do, about 68%, but they didn't have any of the bank failures that we did, and they didn't experience that run up and run down in home prices. They did not have a mortgage meltdown. And they just have a more conservative and more prudent view of the mortgage market up there. It's based more on personal responsibility and savings than social engineering. So in no particular order, I'm going to talk about some of the key differences between their mortgage market and ours. Number one, while the price of a home is typically amortized over a 25-year period, the terms of the loan, i.e. the rate, are re-upped every 5 years. And that sounds like a pain, but it's important because it allows the bank to reassess its asset liability mix. And since I guess the majority of loans come from banks or deposit-taking institutions, that's pretty important because it keeps you from having another savings and loan crisis. Two, these are full recourse loans. There is no walking away in El Norte. If you go into default or foreclosure, the bank can come after everything you have. Also, there is no deduction of interest payments for tax purposes. It's a nice little thing we've got down here, but they don't do it up there. They also are big into mortgage insurance. Now, I hate mortgage insurance because it just jacks up your monthly payment, but it works for them and it keeps the overall system a little bit more solid. Also up there, they have fewer broker-initiated mortgages, and they also have less securitization. Did I get everything? Oh, they have higher prepayment penalties. And while that may make it sound like their borrowing costs are higher than they are down here, they actually have lower loan origination costs. They don't do the whole point thing. And before I make it sound overly severe, they also have some benefits up there that we do not. For example, there is some loan portability, so if you move, you don't have to pay thousands of dollars to a bank for another loan so they can, put a stamp on it. And they also have a better rate lock system than we do. If they lock a rate and the rate drops, they get the benefit of that. So you have roughly the same borrowing costs, roughly the same home ownership rate, and no meltdown.